Hello students, we are discussing about general deductions under section 80. In the previous session we discussed about deduction under section 80G relating to donations and solved some problems relating to that section. In this session let us discuss about deduction under section 80GG in respect of rent paid. This deduction is allowed to an individual in respect of the rent paid for the residential house. To claim deduction under section 80GG, the assessee must fulfill some of the conditions. That conditions are as follows. The first condition is the assessee is a self-employed person or is a salaried person not receiving HRA. The assessee must be a self-employed person or salaried person not receiving HRA. HRA means house rent allowance. Salaried person gets HRA along with his basic salary, but to claim deduction under section 80GG, he should not receive any HRA from his employer. Second condition is the actual rent paid is in excess of 10% of his total income. The actual rent which he paid on his residential house property should exceed the 10% of his total income. Here total income means adjusted total income. We already calculated adjusted total income under section 80G. The same rule applies here also. Total income is equal to gross total income minus long term capital gain minus short term capital gain and deduction under section 80 except deduction under section 80GG. So, his actual rent payment should exceed the 10% of his total income. That is the second condition. Third condition is the assessee, his spouse and minor children should not own any self-occupied residential property in any other place. The assessee should be a person who is living in rented house. He should not own any self-occupied house property in any of the area. Here not only him, his spouse and minor children also should not own any self-occupied house property or any house property in any area. Then only he can claim deduction under section 80GG. Mainly this section is relating to rent payment and the assessee should not own his own house property to claim deduction under this section. So, there are some restrictions to claim deduction under this section. The restriction is as follows. The amount should be one of the following. First one, the excess of rent paid over 10% of adjusted total income. The excess of rent paid, that means the actual rent paid should be in excess of 10% of ATI. That means here the actual rent paid and 10% of adjusted total income. In these two items, the actual rent paid must be higher than the 10% of adjusted total income or 25% of adjusted total income or rupees 5,000 per month, whichever is less. Out of these three items, whichever amount is less should be considered for deduction under section 80GG. That is, the excess of rent paid over 10% of adjusted total income or 25% of adjusted total income or 5,000 per month, whichever is less should be considered for deduction under section 80GG. Let us solve some problems under this section so you can understand this section better. See the first problem, compute total income of Sri Nagaraju of Mandya from the following data. Profits and gains of business or profession 80,000, income from house property let out and situated at Kolkata 40,000, income from other sources 10,000, rent paid for office 8,000, rent paid for residential house 40,000. In this problem, gross total income is not given, so you have to calculate the gross total income as well as adjusted total income. See the first item is profits and gains of business or profession rupees 80,000, that is income from business that you have to consider while calculating the gross total income. Next, income from house property let out and situated at Kolkata. Here the condition to claim deduction under section is the assessee should not own any self-occupied residential house, but here the house property is let out and situated in some other place. So, here he can consider this in calculation of gross total income. And third income is income from other sources. So, you have to consider this income from other sources to calculate gross total income. Next point is rent paid for office. Here this section is relating to rent paid for residential house. So, you should not consider this rent paid for office. This is irrelevant in this problem. So, it is not allowed for deduction under this section. Next point is rent paid for residential house rupees 40,000. So, actual rent paid by Mr. Nagaraju is 40,000. This one you have to consider. Next, see the solution. Statement of total income, 3 columns you have to draw. See, income from house property 40,000. Profits and gains from business or profession 80,000, income from other sources 10,000. Total of these 3 items amounts to rupees 1,30,000. This is your gross total income. Here you have to calculate adjusted total income. What is adjusted total income? Adjusted total income is equal to gross total income minus long term capital gain minus short term capital gain and deduction under section 80 except deduction under section 80GG. There is no such items in this problem like long term capital gain, short term capital gain and deduction under section 80. So, here your gross total income is the total income or adjusted total income. So, the ATI or adjusted total income is 1,30,000. So, here you have to deduct deduction under section 80GG from this gross total income to get total income. There are restrictions to claim deduction under this section, that is first restriction is rent paid above 10% of ATI. Here rent paid is 40,000, rent paid 40,000 minus 10% of adjusted total income. Adjusted total income is 1,30,000, 10% of 1,30,000 is 13,000. When you deduct 13,000, that is 10% of adjusted total income from actual rent paid, you get 27,000 as balance. That is the first restriction. Second restriction is 25% of adjusted total income. Adjusted total income 1,30,000. 25% of 1,30,000 is 32,500. That is the second restriction. Third one is 5,000 per month. 5,000 per month means for 12 months the total amount is 60,000. Whichever is less you have to consider. Here see section 80GG, deduction for rent paid, least of the following. Which is the least of the following here? 27,000 is the least of the following. So, you have to consider 27,000 for deduction. When you deduct 27,000 from 1,30,000, you get 1,03,000 as total income or taxable income of Mr. Nagaraju. So, this is the problem relating to deduction under section 80GG. Let us solve another problem. See here, the gross total income of Shri Gopalan is rupees 3,25,000, including short term capital gains taxable at 15%, rupees 1 lakh. He donated rupees 6,000 to Prime Minister's National Relief Fund. During the year, he paid rupees 8,500 towards education loan, that is 5,000 towards principal and 3,500 rupees towards interest. He stays in a rented house paying a rent of rupees 3,000 per month. Compute taxable income. Here you have to calculate taxable income of Shri Gopalan. See the problem. In this problem, gross total income is given, that is 3,25,000, including short term capital gains of rupees 1 lakh. You have to consider this short term capital gain to calculate adjusted total income. He donated 6,000 to Prime Minister's National Relief Fund. Prime Minister National Relief Fund is a donation without limit. 100% deduction can be allowable to this item, that is rupees 6,000. During the year, he paid 8,500 towards education loan, out of which only 3,500 towards interest. So, here you should not consider 8,500, you consider only 3,500, because under section 80E only interest on education loan can be deductible. So, consider only 3,500, not 8,500, and you can ignore 5,000 principal amount. Next, see, he stays in a rented house paying a rent of rupees 3,000 per month. Here rent per month is given, you have to calculate annual rent. 3,000 multiplied by 12 months. So, the rent amount for a year is 36,000 rupees. You have to calculate taxable income of Mr. Gopalan. Let us calculate his taxable income. So, statement of total income is given here. Gross total income 3,25,000. From that you have to deduct deduction under section 80. Here 3 sections are there to deduct from gross total income: 80E, 80G and 80GG. Deduction under section 80E relating to payment of interest of education loan 3,500. 80G is relating to donations. Here donation to Prime Minister's National Relief Fund, 100% deduction can be allowable, 6,000 rupees. Next you have to calculate deduction under section 80GG, deduction for house rent. Least of the following is the deduction which is allowable under section 80GG. First restriction is rent paid above 10% of adjusted total income. Actual rent paid is 36,000, that is 3,000 per month. 3,000 into 12 is, here see the notes, annual rent 3000 into 12, 36,000 is the total rent paid. So, from that you have to deduct 10% of ATI. Here ATI means adjusted total income is equal to gross total income minus short term capital gain minus deduction under section 80E minus 80G. Gross total income is 3,25,000. From that short term capital gain you have to deduct 1 lakh, and interest on education loan 3,500, and deduction under section 80G is 6,000. This is not 36,000, this is 6,000. When you deduct these items from gross total income, you get 2,15,500 as your adjusted total income. 10% of this 2,15,500 is 21,550. When you deduct 21,550 from 36,000, you get 14,450 as rent paid above 10% of adjusted total income. So, that is the first restriction. Second restriction is 25% of adjusted total income. Here 25% of adjusted total income is 2,15,500 your adjusted total income. 25% of that means 53,875. So, 25% of 2,15,500 is 53,875 or 5,000 per month, that means 60,000 per annum. Whichever is less you have to consider, whichever is less you have to consider. Here the least of the following is 14,500, you have to consider 14,500 here. When you add these three items, that is 80E, 80G and 80GG, you get the total of 23,950. You have to deduct this deduction under section 80 from the gross total income to get his taxable income. So, the taxable income or total income of Gopalan is 3,01,050 rupees. So, this is about section 80GG, that is deduction in respect of rent paid. Here self-employed person or salaried person who is not receiving house rent allowance can claim deduction under section 80GG if he is staying in a rented house. If he is staying in a self-occupied house property, he cannot claim deduction under section 80GG. There are some restrictions. The restrictions are rent paid above 10% of adjusted total income or 25% of adjusted total income or 5,000 per month, whichever is less. So, this is about deduction under section 80GG. Let us stop this session here and let us continue the rest of deductions in the next session. Thank you. Let us meet in the next session.